Over a month has gone by following the earnings report for Public Storage. Since then, shares have increased by about 2.4%, outperforming the S&P 500. Will the recent positive trend continue leading up to its next earnings release, or is Public Storage due for a pullback? Let's take a look. Public Storage's third quarter 2018 core funds from operation per share of $2.70 improved 3.4% from the prior year quarter figure of $2.61. Results highlight improvement in net operating income from same-store and non-same-store facilities. Higher realized annual rent per occupied square foot supported the company's same-store performance. Additionally, Public Storage benefited from its expansion efforts in the reported quarter. Quarterly revenues of $706.4 million also climbed 2.9% from the prior year quarter. The weighted average square foot occupancy was a healthy 94%. In addition, the company's net operating income from non-same store facilities grew on the back of the 153 self-storage facilities acquired and developed since January 2016. During the September end quarter, Public Storage bought 11 self-storage facilities. Following September 13, 2018, the company acquired or was under contract to acquire 9 self-storage facilities. Finally, as of September 30, 2018, the company had 1.6 million net rentable square feet in development in addition to expansion projects totaling 3.8 million net rentable square feet. That all sounds good, but let's take a look at the charts. This is the 20-year monthly chart on Public Storage, and the symbol is PSA. For disclosure purposes, I do not own any shares of PSA. However, a caveat: I have attempted to get my wife to buy this stock. However, she hasn't bought any shares as of this recording. Now, taking a look at the chart, I really like this chart. We've had a top here, well above $250 a share, with a decent contraction and consolidation over a period of nearly 3 years, going back to the 2007-2009 timeframe where the great financial crisis occurred. The same sort of effect happened. A very nice top at this point, and then the contraction and a long consolidation of over 2 years. Now, the current downtrend, as indicated by the MAC here, you can see is that we are at a very comparable level as we were back in 2009. I like that. We've had a very good correction. Now, moving on down here, the MACD indicates that this was worse than it was back during the great financial crisis. And again, I like that simply because the price, we'll go back to that, the price is well above where we were in 2019. So great amount of progress has been made since 2009. Going here into the price rate of change, you can see that too was below the great financial crisis time frame of 2008, 2009. The relative strength index is roughly equal, but heading on its way up. Now, this is the only concern in my humble opinion. The stochastic, we've had a bottom here. We've come up to this point here, and I'm not sure if it's just about to stall out, but I think that this is only going to be temporary. So I'm not going to suggest buy today. I am going to say take a very close look at this and continue your research with your fundamentals. But in my opinion, that is the only hiccup in all of this. Volume looks fine. Looks like it has a steady increase for the last several years. Into the Williams, we definitely have the bottom here that lasted a couple of years or so. And we did move up all the way up to here, came back down here. So we might have another hiccup here, but I don't think that's very serious at all. Going back up here to the price chart. Again, I really do like that contraction and the consolidation that occurred over several years. So now, is real estate going to have more problems here in the near future? Well, perhaps housing, but I'm not so sure about the storage facilities. But that's why I want you to conduct your fundamental analysis. Just make sure that revenue and earnings are continuing to march upward. But in my opinion, I suggest taking a look at public storage. So for today, that's ChewDog Charts. Thank you.